Good afternoon. This is Brian Split with Allendale on Thursday, July 29th with your closing commentary. We did have the grains all finish higher today, again led by the wheat market. Corn September contract was up 3 cents at settlement today at 3.79 and a quarter. The D's contract was also up 3 cents at 3.93 and 3/4. As far as the soybeans go, we did have the front month August up 16 and a quarter at 10.26 and 3/4. November contract was up a dime at 9.88. As far as wheat goes, we did finish 12 higher in September at 6.27 and a half. December contract was up 12 and a half at 6.59 and a half. The story for corn today was mainly spillover buying from the wheat market. We did close higher on the day, but selling was very evident when December futures could not push through $4 early in the session. As far as looking ahead to tomorrow and what we may see as possibilities, if the wheat market does continue to go higher, we want to look for a possible close above 403 and a half. That would look like a key reversal on the weekly chart, which should leave the momentum on the bull side technically. And if we do see some pressure develop tomorrow, close below 390, which is where the 20-day moving average, that would leave the momentum slightly neutral to possibly bearish. If we can close back below 386, that would put the momentum back in the bear camp, especially if that closes below the 100-day at 383. On the soybean side of things, we were up today on good export sales, again spillover from the wheat market, and we continue to see just some periodic buying of soybeans from China. No buying today, but we had some buying announced earlier in the week, so that is going to linger as support for the market. We also have first notice day for the August future contract coming tomorrow, and it is anticipated that we're going to see no deliveries for August soybeans or August soy meal. We are expecting heavy oil deliveries based on the fact that we have about 3.5 billion pounds of supply at this point, and we have yet to see any approval of an ongoing biodiesel tax credit, so that it continues to put a burden on the demand at this point. But as far as the charts are concerned, if we have a close tomorrow above 992 and 3/4, that would be an outside week up on the soybean chart for November. Not a key reversal, but an outside week up, which is still a strong signal. Looks like soybeans need to really close below 960 to get this market bearish here, so we'll watch out for that. Wheat, that's the main driver of the market right now. They continue to talk about Russia, the drought in Russia. They're projecting this drought's going to go on for at least another 10 days. There was some more talk this morning about Romania and their wheat, and we had floods and impacting their yield potential. There was also talk about Ukraine possibly banning exports on their wheat. They're looking at possible food shortages. And this is a tough thing to digest with the wheat market based on if you're looking at our domestic supply situation and what's going on overseas. This seems to be more of a geographical distribution problem, not a global supply problem. And based on the previous 2 years of record harvest here for the global wheat, we've put our global ending stocks up to pretty adequate levels, adequate enough to really be able to absorb these production reductions that we're seeing from the Black Sea region. And bottom line, it looks like at this point the government officials in Russia are saying that the damage is done with this wheat. This drought can go on for another month and we're not going to lose more production. And even with the production reductions that we're seeing, this is still the third biggest harvest for wheat that we've seen out of Russia. So just keep that in perspective. At this point for the September contract, it looks like chart-wise you need to close below 570 to get this market to turn around technically. If we see a little bit more consolidation, more support develop on the way up, then that number may change, but as we're sitting right now, that's the number we need to get below. As far as the meat markets today, did have the cash cattle trade 93 on 11,000 head in Kansas. Looks like dressed beef was 147 and 145 in Nebraska and Iowa. Also had the box beef lower. August fat contract did trade 92 lower today. Settlement was 91.85. Had August feeders down 80 today at 113.72. Closed below 114, maybe significant on the chart technically. 114 has been a pretty key area. When we traded above 114 here on August, we saw a quick pop. got near 116, and so today's close below that with the overbought conditions could bring some more profit taking there. As far as the hogs go, we had cash pork up $2.50. October through the May contracts did provide new contract highs today. These are the highest cash prices we have seen since May 18th. The August future contract was up $1.47 today at 84.85. Very strong closes today and technically bullish at this point. As far as outside markets, looks like equities are trading just about unchanged to slightly higher going into the last hour of trade here. There is a potential double top on the mini Dow futures chart, so if we do start to see some selling develop here, especially if we take out some of the moving averages right below today's lows, then we may see a little bit more of profit taking occur here. Equities are very overbought at this point, so that is very possible. Some people are looking at the bond charts right now, testing their uptrend. If these bonds turn around and go higher, that could also be a signal that the equities are ready to take some money off the table here. As far as the dollar index, we are down about 60 at this point. This is new lows for the move today. Next support is going to be roughly your 200-day moving average on that September contract at 81.20, and really we need to close above 83.64 at this point, which is the last swing high to get bullish this contract based on the chart formation currently. Crude oil did finish $1.37 higher today at 78.36. Most of the positive news today for crude oil was economic data. Had some positive Eurozone economic news out of Germany. U.S. jobless claims were also fell last week. Equities did not hold on to their early gains. Why crude oil did, tough to say, especially when we had a 7 million barrel build in inventories yesterday when the trade was looking for a draw. So with the dollar down, that may be part of the reason, but with that supply build and with the equities unable to hold on to gains today, it is surprising to see crude oil maintain that strong. Gold up $8 today, and copper's another chart you probably want to look at. That market's been trading very bullish recently. A lot of buying out of China for copper, keeping demand strong. That's about all I got as far as markets. I want to remind you, tomorrow's the last day for our research special. We're offering a special out to the end of the year, December 31st, and it's a lot of good value. You're going to save a lot of money based on what you'd normally pay for a subscription. So if you have any interest in our research, please give us a call. Our number is 1-800-2-MARKET. That's 1-800-262-7538. Good luck trading tomorrow, and I'll be back at you in here in 24 hours to let you know how we finished up the week. All right, thank you.